In November of 2024, while political pundits were still arguing on live television, a market had already made up its mind. Not a poll, not a panel of experts, a market. Millions of dollars had flowed into contracts predicting who would win the US presidential election, and before the final states were called, prices had quietly settled into something that looked a lot like the eventual result. And this wasn't a one-off. Prediction markets have anticipated inflation trends, interest rate moves, Supreme Court decisions, even the likelihood of government shutdowns, sometimes more accurately than experts whose job is to predict those things. So, what are prediction markets? How do they work? And can you actually make money trading them? Let's find out. In its simplest form, prediction markets allow you to buy and sell contracts based on future events. The two largest prediction markets are Kalshi and Polymarket, but lately, more and more companies have thrown their hat in the prediction market ring. Robinhood, FanDuel, Interactive Brokers, and Coinbase, just to name a few. Generally, each market poses a question like this. Which party will win the US House of Representatives? Fed decision in March? Or will Taylor Swift and Travis Kelce be married before January 1st, 2027? The answer is yes. Here is a real invitation I received to their very real wedding. Now that is some free alpha for you. Anyways, these contracts are priced between 0 and 100 cents, with the amount being closest to the percent chance of it happening as determined by buyers and sellers. The correct contracts resolve to 100 cents and the incorrect contracts to 0. So if I buy 100 shares of one battle after another winning the Oscar for Best Picture and I'm right, my 74 shares turn into $100 for a $26 profit. Or if I bought 100 shares on a long shot Sinners winning, my $15 would turn into $100 for an $85 profit. If you're new to trading in general or used to very liquid markets with plenty of market makers and volume, you should know that just because a market exists doesn't mean you can buy as many contracts as you'd like at the going rate. When traders talk about volume, they usually mean one thing. How easy is it for me to get in and out of a position without moving the price? In traditional futures markets, volume is everywhere. Take something like the S&P 500 futures. Hundreds of contracts trade every minute. Bid-ask spreads are razor thin. As a retail trader, it's easy to get in and out of a position with the smallest amount of slippage. Prediction markets are different because of the markets themselves and the lack of institutional liquidity providers. So I can't take the equity out of my house and pile it onto a yes for the T-Swift wedding to pay for that custom tux that I've been eyeing. Currently, the volume is just over $200,000 for this market, and we all know my equity is much greater than that. Pop open the order book and you can see where the volume lies and how I would get filled at a variety of less than ideal prices. Both Kalshi and Polymarket have introduced market maker programs to help introduce more liquidity to the markets, and prediction markets have become more and more popular with retail traders. In the last week of January this year, Kalshi and Polymarket both had over $2 billion in total notional volume. We already have lots of ways to predict the future. Polls, experts, forecast models, the crystal ball I picked up on Temu for $3.15. So why add money into the mix? Because money changes behavior. When you answer a poll, there's no cost to being wrong. When you make a prediction on Twitter, there's no penalty for overconfidence, other than me unfollowing you. But in a prediction market, being wrong costs you real money, and being right pays you. Check out these stats. Here, the lower the number, the more accurate it is. Polls are shown to be the least accurate, with prediction markets being the most accurate.
It's the most accurate thing we have as mankind right now, until someone else creates some sort of super crystal ball.
Hang on a second, Shane. Well, shit. Having money as an incentive structure does something powerful. It forces people to reveal what they actually believe, not what sounds good, not what aligns with their identity, but what they actually think will really happen. In economics, you'd call this information aggregation. People with different pieces of information, data, expertise, intuition, compress all of it into a single number, a price. And prices continuously update in real time as new information arrives. The first time I encountered prediction markets was back in 2019 before the upcoming presidential election. There was a not-for-profit site run by Victoria University of Wellington in New Zealand called Predictit. They were allowed to operate for educational purposes by limiting the amount of money each person could trade to $850 and the amount of traders per market to 5,000. But then Polymarket and Kalshi hit the scene. Initially, Polymarket wasn't available to US users, and Kalshi had just a limited offering of markets. But before the last presidential election, the Commodity Futures Trading Commission granted Kalshi the ability to offer political and sports contracts.
The number of markets, just the sort of operation has scaled 15x just from last October.
This regulatory approval requires compliance with financial safeguards and oversight, but it has really opened the doors for more and more companies to enter the space. So now we're seeing companies such as Robinhood, Coinbase, Interactive Brokers, and FanDuel join the prediction prediction market world with their own offerings. We're even seeing traditional financial market players like the Intercontinental Exchange, the parent company of the New York Stock Exchange, back the prediction markets.
Last month, Polymarket got its biggest validation yet. The company that owns the New York Stock Exchange announced it was investing $2 billion in Polymarket.
And not to be left out of the fun,
Sports betting player FanDuel partnering with derivatives marketplace CME Group in a predictions market platform that's now set to be released next month.
with the Golden Globes integrating Polymarket odds into its broadcast, it's safe to say that prediction markets are becoming mainstream. Sports leagues have also struck deals with Kalshi, along with news networks, to take it to the next level. When I post futures trading videos on my channel, I always get several of the inevitable "this is just gambling" comments. They are gambling that I won't do a deep dive on their username, find their real name and email address, and then sign them up for unhinged emails from the Midwest home improvement giant Menards. But I digress. Of course, there is an element of risk with trading on an unknown outcome. You can't control the unknown, but what you can control is your strategy. How do you manage risk? How do you size your trades? Do you exit trades early before the result is confirmed? Or are you just YOLOing on things you don't have any clue about? If you really want to gamble, throw 5 minis long on NASDAQ because the moon is in Aries waxing crescent, which is clearly a buy. Obviously bullish. Shit. Bad example. My advice with any type of trading like this is to be smart and control your risk. There's a reason why top day traders make consistent profit month over month, and why you often see Phil Hellmuth at a Texas Hold'em final table. They know their edge, they know when to strike, and they know how to manage their bankroll. Now, one thing that's cool with the prediction markets is you can actually check out the leaderboards on Polymarket and Kalshi and see what the best traders are predicting, if they are selling contracts early or holding until final resolution, what categories are involved with, etc. I think the prediction markets are a lot of fun, and I also think with anything involving money, you need to implement risk management. I've seen posts on social media with people just YOLOing their life savings on something. Please don't do that. When it comes to anything in financial markets, don't risk more than you're willing to lose. That's it for this one. If you want more content about all things prediction markets, make sure you subscribe and check out the link in the description to be the first to find out what we're building over at Catalyst. Until next time.